Welcome to Pro News Weekly. Let's dive into the weekly updates on the financial markets. The US dollar turned to growth in the second half of the week, returning to its highest level against a basket of major currencies since November 2022. The fundamental driver of the US currency's strength remains the growing likelihood that the Federal Reserve will leave its key interest rate unchanged in December. The probability of such an outcome is now estimated at around 45%, up from 28% a week earlier, and just 18% in the middle of last week. The market has undergone a crucial test of the upper boundary of the trading range over the past 2 years. This is doubly interesting as the lower boundary of this range was only tested in late September. Remember that we consider a confident breach of 107 by the dollar index to be a signal of a range break. This would open the way to the 2022 highs at 114, and it might not take long. 2 years ago, a similar move took 6 weeks. At the beginning of the week, the euro-dollar pair bounced from around 1.05 to 1.06. However, by the end of the week, the market was dominated by active selling of the single currency, which brought it back to the lower end of the range against the dollar. It is important to remember that historically, the euro-dollar pair has either reversed from this area and rallied strongly or failed miserably and plunged confidently below parity. The first scenario occurred in 2022 when the pair plunged to 0.95 and in 1999 when it crushed to 0.83. We saw rebounds from this level in 2023, 2020, and between 2015 and 2017. U.S. indices began the week with a bounce. However, on Thursday, the strength of the buyers on the downside seemed to have dried up. The pressure can be attributed to a general risk-off sentiment. The positive post-election momentum in equities has dwindled, and traders are waiting for new signals from the transition team. This could include both new appointments and statements from members of the president-elect's emerging team, as well as details of already announced plans. In this case, the lack of news is bad news, as the stock looks overbought on many standard measures. On the technical side, a major bearish signal was the deepening correction in the S&P 500 index from November 11th to 15th. The bulls managed to keep the market above the October highs, just below 5,900. We see 5,800 and 6,000 as signal levels. There is a 50-day moving average near the former. A break below could intensify the sell-off. The second is the area of historical highs, a return to which would signal investor confidence and open the way for further growth. Gold returned to growth after almost 3 weeks of decline. Rising tensions over the Russia-Ukraine conflict brought gold back to the forefront of investors' minds as equity markets came under pressure. Since the beginning of the week, the price has risen by 4% and is back in the $2,670 area. Technically, the price has returned to its 50-day moving average, which is an important indicator of the medium-term trend. The ability to rise further would be an important price signal. In this case, a working scenario would be that the decline in early November was a technical correction from the rally of last October. This correction culminated in a fall of 76.4% of the total gain. Such shallow corrections are characteristic of strong markets. If gold manages to make new highs in the short term, the long-term target will be $3,400 per troy ounce. The cryptocurrency market was a little timid at the start of the week, but by midweek, it had gained the confidence to move higher. The total capitalization of the crypto market approached $3.2 trillion, up over 120% year on year. But it's not an even tide. Bitcoin remains the winner of this rally. Altcoins, apart from Ethereum and stablecoins, only began to rally after the US election results in early November. The crypto market sentiment index was firmly in extreme greed territory, hitting an annual high of 90. We have only sporadically seen higher levels of the index in late 2020, which is reminiscent of the persistence of Bitcoin's 4-year halving cycles. Bitcoin approached $98,000 on Thursday, adding around 10% to its level at the start of the week. Since the US election, that is in just over 2 weeks, the price has risen by almost 50%. We attribute last week's rally to a new round of geopolitical tensions. The new wave of corporate and government adoption of cryptocurrencies, as well as the emergence of futures and options on spot ETFs, is a broader supportive trend. The following publications could cause some interesting movements in global markets this week. The Reserve Bank of New Zealand will release its interest rate decision at the beginning of Wednesday. In August, it was cut by 25 points against most expectations, and in October, it was cut by 50 points in one go. Now, the prevailing forecast is for the rate to remain unchanged at 4.75% after a double move at the last meeting. This meeting is important for the Kiwi, which is trading near the lower end of this year's range. A dovish tone from the central bank could trigger a dam-busting effect, sending the currency towards the 2022 and 2020 lows near 0.55. On Wednesday evening, the Fed will release the minutes of its latest meeting, which could help clarify the U.S. central bank's view on the outlook for monetary policy after 2 rate cuts. Are they really close to pausing after 2 cuts, totaling 75 basis points? At the end of the week, the focus shifts to inflation in Europe, with the release of preliminary German inflation estimates on Thursday and all eyes on the Eurozone composite figures on Friday. In Germany, the rate of price increases has stabilized just above the ECB's 2% target since March. But the acceleration from 1.6% in September to 2.0% in October is attracting attention. Will November confirm the emergence of a new growth trend? Overall, the Eurozone inflation also reached 2% in October, and all eyes will be on its future direction. Eurozone figures can determine the ECB's sentiment, which in turn affects the EUR exchange rate, which is at a technically important level. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.